one of the biggest gaps I see between different investment groups is some have kind of a short-term exit strategy and some have kind of a longer-term passive income strategy. What is it that you guys really focus on, or do you kind of take a little bit of both?
Yeah, we've got a little bit of both. It was actually a suggestion I was going to give, and I'm glad you came back to it. Because when you're looking to structure your deal, you got to understand what's your goal, and that's going to attract a different investor. So most of our investments we set up with the syndication to give us the flexibility to hold between 5 and 7 years. And we have a refi goal. So we call it a liquidating event. Within 18 months of buying the asset, maybe 24 months, it's a personal goal between Rudy and I. We want to either have it in position to refi it and get the investors, original capital investment out, or have it in position to sell it, right? So maybe it took us 90 days to get all the infrastructure fixed. We started infilling it, and then we kept it for a year to create a P&L. We found an investor, sell it, great, right? It's a liquidating event. But the goal, and I think if anybody's doing a syndication, if you put the investor at the center of everything you do, right, every decision you make, the goal is how soon can you either get their money back in their hands or get their return. Good things are going to happen for you. If you're taking care of your investors, good things will happen for you. So that's what our goal is go find the property, get a liquidating event of some kind within less than 2 years. But we always have the flexibility within 5 or 7, just in case we need more time on a property before we sell it. And that's a different investor, okay? We do have at least one property I'm thinking off the top of my head, and this baby is just plug and play. Actually, we have 2. We call them steady eddies. No infill needed, no infrastructure issues. Really, the market rent was way below average, so we bought it, and it's just a little cash cow, right? We don't necessarily have a big liquidating event coming anytime soon, but it's super dependable. It's de-risked, and these investors just love getting their mailbox money, as often as they possibly can. And then we'll probably marry that with when we sell the whole portfolio, just marry that in, and whenever we sell the whole thing, potentially move it with it. But that's a different investor. So you really got to get clear on what your goal is, what your outcome is, and then your folks that are less want less risk, they'll want to go that steady eddy. The folks that are looking for that upside will go more on maybe your fix and flips, as an example.
A change of pace from the get-rich-quick gurus. Subscribe to the Real Finds podcast for in-depth conversations with voices shaping the real estate world.